Welcome to The Explainer. So if you're a business owner, listen up, because what we're talking about today is a huge deal. We're diving into equipment financing for 2026, and believe me, things have changed. There's a brand new tax law that has just completely flipped the script, and we are going to walk you through exactly how you can use it to really supercharge your growth.
Okay, so here's how we're going to break it all down. First, we'll tackle the big dilemma that pretty much every business is facing right now. Then, we'll get into the good stuff, this OBB tax revolution. After that, we'll map out the modern lenders so you know who to talk to, explore the big advantages of SBA loans, and then you'll walk away with a crystal clear action plan to get that financing. Let's get into it.
All right, Section 1, the 2026 Equipment Dilemma. Yeah, this is all about navigating those costs versus the opportunities out there. It's the central challenge, really, that every business owner is wrestling with this year.
So, this is the big one, isn't it? Is 2026 actually a good time to buy new equipment? You know, after the last few years of just uncertainty, a lot of you probably held off on big purchases. And now you're wondering, okay, is now the time? Is it finally the right moment to pull the trigger?
Well, it's kind of tricky. On one hand, you've got what feels like a risk, right? I mean, interest rates, while they're stable, are definitely higher than they were a few years ago. And you've still got these stubborn tariffs making some equipment more expensive up front. But, and this is a big but, there's this massive hidden opportunity. It turns out the cost of just keeping your old clunky machinery running, the repairs, the downtime, that's actually starting to cost more than financing something new. And the real kicker? There are incredible new tax incentives that can just dramatically chop down the effective price you pay.
So, what is this hidden opportunity I'm talking about? Well, let's get into it. Section 2, the OBBA tax revolution. And I'm not exaggerating when I call it a game changer for capital expenditures. This is a massive new tax law that fundamentally changes the math of buying equipment.
And here it is. The quote says it all. The One Big Beautiful Bill Act, OBBA, represents the most significant shift in business tax policy since 2017. Yes, that is its real name, OBBA. You heard me right. But look, don't let the kind of goofy name fool you. This law has created some of the most powerful, most generous incentives for businesses to invest that we have ever seen.
Okay, first, let's talk about the Section 179 deduction. The new maximum you can deduct is now, get this, $2.5 million. That's not a typo. It's been massively increased. So what exactly is this thing? Well, Section 179 is pretty amazing. It lets your business deduct the full purchase price of equipment in the same year you put it into service. You don't have to spread it out over years and years. You get the whole benefit right now. It's almost like getting an instant tax rebate directly from the IRS for buying the gear you need.
All right, but that's not all. The second piece of this is huge. I mean, this is the real headline grabber, 100% bonus depreciation. A lot of people thought this was going away, that it was being phased out, but nope, not only is it back, OBBA has made it permanent. That's a massive deal.
And this is where the OBBA's power really shines. Bonus depreciation lets you deduct 100% of the cost of your new stuff in the first year. But here's the key difference from Section 179. It's not limited by how much profit you made. So, even if the deduction is so big it pushes your business into a loss on paper for tax purposes, that's okay. You can actually use that loss to lower your taxes in future years when you're making more money. It's an incredibly powerful planning tool.
So just look at this comparison. The takeaway is pretty clear, right? The new law makes these deductions so much more accessible. OBBOA didn't just double the maximum deduction from $1.25 million to $2.5 million, it also seriously raised the spending cap before that benefit starts to disappear. This is a massive win, especially for those mid-sized businesses that are growing fast and spending more, because now you can take full advantage of this thing.
Okay, so you've got these incredible tax incentives. The next question is obvious. Where do you get the financing? Let's move on to Section 3 and map out the modern lenders to help you find the absolute right partner for your business. So in 2026, the lending landscape really comes down to what you need most. If you want to compare a bunch of offers with just one application, online marketplaces are the way to go. If you need cash like yesterday, direct online lenders are the fastest. We're talking 24 to 48 hours. But if you're an established business and your number one priority is getting the absolute lowest rate, your traditional bank is still your best bet. You just have to be a little more patient.
And to put some names to those categories, here are the key players right now. For comparing offers, Lendio is the big one, with a network of over 75 lenders. For speed and for startups, they only require 6 months in business. Check out National Funding. For those low rates, if you're an established firm with solid revenue, Bank of America is a great option. And if you're buying specialized heavy equipment, a place like First Citizens Bank is a real expert in that niche.
All right, now let's talk about something really powerful that kind of bridges the gap for a lot of small businesses. Section 4, the SBA Loan Advantage. This is all about government-backed loans, and they can be a fantastic option.
So, what is an SBA loan really? Well, the key thing to understand is the SBA, the Small Business Administration, doesn't actually lend you the money directly. Think of them as your ultimate co-signer. They guarantee a big chunk of the loan for the bank, which makes you a much less risky borrower. And because the lender's risk is lower, they're way more willing to say yes and give you better terms, like longer repayment plans and smaller down payments. Now, there are two main types you need to know about. First is the SBA 7A loan. This is the most common one, kind of the flexible workhorse. You can use it for almost anything: equipment, working capital, you name it, up to $5 million. Then you have the SBA 504 loan. This one's more specialized. It's a real powerhouse for buying major fixed assets, things like real estate or that big, heavy equipment that's going to last for years.
And this is where the 504 program gets really cool. It's all about its structure. Look at this. A bank puts up 50% of the cost. Then a nonprofit partner of the SBA called a CDC puts up another 40%. And what does that leave for you? Your business only has to bring 10% to the table as a down payment. I mean, think about that. You can acquire a massive asset for just 10% down. That is a huge advantage. Okay, we've covered the why, those amazing tax breaks, and the who, all the different lenders. So let's finish up with the how. Section 5, your financing action plan. This is your step-by-step guide to actually getting funded. Look, before you even start filling out a single application, do yourself a favor and get this checklist done. First, figure out exactly what equipment you need, what it costs, and how it's going to make you money. Second, know your credit scores, both personal and business. It's just good to know where you stand. And third, gather up your financial documents ahead of time. I promise you, doing this prep work will make the whole process so much faster and smoother. And when it comes to documents, what's really interesting is how simple it can be, especially for smaller deals. If you're looking for under 150 grand, a lot of lenders just need a quick online application, your last 3 bank statements, and an invoice for the equipment. That's it. For bigger deals, yeah, you'll need more stuff like tax returns, but for many of you, the process is way less scary than you might think.
Okay, one last big decision you have to make: loan or lease. With an equipment loan, you own it right away, which is perfect for taking full advantage of those awesome Section 179 and bonus depreciation benefits we talked about. An equipment lease, on the other hand, usually means lower monthly payments and more flexibility. This is great for stuff like tech that gets outdated fast. Now here's a pro tip. Look for something called a $1 buyout lease. For tax purposes, it basically acts like a loan, meaning you can still get all those juicy tax deductions. It's kind of the best of both worlds.
So with 100% bonus depreciation back on the table for good, what are you going to invest in first? Look, the bottom line is this. We're in this really unique, powerful moment. You've got a stable economy combined with the most generous business tax incentives we've seen in decades. OBBBA has effectively put all the equipment your business needs on a massive sale. The only real question left is, what are you going to do about it?